Hi, everybody. We're going to talk about two companies today. The introduction and the framework first. And this presentation provide a comparative financial performance and stability analysis of the Caci's International Inc. and Unisys corporations. The comparison is conducted by using the BCG matrix framework, which is evaluates firms based on the growth potential and the market strength. Through long-term financial data, we can clearly observe that those two companies follow a very different development trajectories and representing two contrasting positions in the matrix. First of all, the Caci International Inc. is a long-term government service and IT contractor, and over 50 years of continuing operations. So in the BCG matrix, Caci is classified as a stock company. The It demonstrates substantial growth and strongly profitability and long-term financial stability. From 1974 to 2024, Turkey revenue increased dramatically from 3.6 million to approximately 7.7 billion, showing a clear continued growth and expansion curve. This reflects a strong execution capability and effective strategy and a scalable business model. In the term of the profitability, Gaki maintained high growth margin of about 50% to 60% in its early years, and although margin declined slightly with the expansion, the stabilized at around 33 to 35% in recent years. Despite massive revenue growth, profitability remained stable, indicating that a strong cost control and a higher value added the service portfolio. About the market profit performance and investor views, so we can see that the regression analysis showing that a very strong positive corrections between the net profit and the stock price, which an R square of 0.9 means that the market highly value Kaki's profit growth. With only one net loss in 51 years and 40 years continually of the probability Kakis shows that outstanding financial stability and resilience, especially due to its U.S. government-based customers structure. About the Unisys corporations. Financial performance overview is dog. Unisys profitability shows that a clear downward trend. In contrast, Unisys is categorized as a dog in the BCG matrix, although it has a long-term history in IT and technology service. Its financial performance is showing the high volatility and long-term decline. Unisys experienced a full market life cycle from the early growth and prospectively to the stagnations and contraction. Share the sales peak at over 10 billions in the early 1990s, but today the company's operations at the significantly reduced the scales of around 2 billions in the annual revenue. The Unisys profitability, eruption, and financial risk. Unisys profitability shows a clean downturn. Its gross profits margin fell from over 16% in earlier years to a low of 23.81 in 2015 and remain weak at around 30 to 40% in certain years. More importantly, the company reports net loss in approximately about 20 of the last 36 years, indicate seriously and persistently the operations problems. The suggestion weak price power. This is just weak pricing power and poor cost control and a lack of sustainable competitive advantage. About the market performance and investor implications. The positive corrections between the net income and the stock price. The R square is about 0.5%, 0.5. Exchange loss period corresponds to the depressed share price. Clear sign of the competitive erosion and the market displacement. High risk investment without clear evidence of turnaround. In the conclusion, Caci and Unisys represent two completely different financial profile. Caci is a high quality, low risk growth company, such from a long-term investor seeking stable returns, predictable cash flow, and industry leadership. And the Unisys is, on the other hand, shows signs of the struggle decline and then competitive eruption and then highly financial risk. Without clear evidence of the such turnaround, NSS should be viewed with extremes caution from the from investor perspective. In another words, Caci is a star, and then Unisys is a dog. So to choose the star and don't choose the dog.